afternoon and welcome to BizTech's Asian Midday Market Watch. It's Thursday, the 25th of May, and we have our regular guest, David Kuo, founder of The Smart Investor, coming to us out of Singapore. David, as always, good afternoon.
Selamat tengah hari, Brian.
Now, David, today we're going to do a special focus on Japan, but before that, we're going to take a look at the debt ceiling. David, your thoughts on the debt ceiling and also potentially why Fitch may downgrade US debt if a deal doesn't go through?
Well, as a rating agency, I mean, they have a responsibility to look at a country and say, how stable is this country's debt? It is a really sad day, not because Fitch has put American debt on negative watch. It's also a sad day because Tina Turner passed away today at the age of 83. Right. I grew up with Tina Turner. What is your favorite Tina Turner song? Because I'm going to be playing Tina Turner songs on my Spotify all day today. So which is your favorite of all Tina Turner songs?
I don't know.
Would it be Not Push City Limits? Or would it be River Deep, Mountain High? I mean, that was another Tina Turner song. But anyway, I mean, going back to what you were saying about the debt ceiling, Fitch feels it has a responsibility to warn investors that because of this wrangling that is going on between the Republicans and the Democrats, that it is very unsavory, particularly for American debt holders. I mean, what would happen if America did default on its debt? It would be terrible. And we have to go back to 2011, the last time that American debt was, at that time, downgraded by S&P. They downgraded it by one notch. And so we could turn around and say, yeah, you downgrade the debt, but people are still going to buy it. But I think it is a warning shot across the bows of America. And I was listening to McCarthy talking about the debt ceiling over in America. And what it's saying is that America just cannot keep on doing this. It cannot just keep on borrowing money, spending more than it can take in terms of revenues, and expect the whole world to accept that it's okay. It's not okay. And something needs to be done. And America does need to spend based on what it is going to be receiving in terms of revenues, rather than to say, I can spend what I want, and when I just want more cash, I'll just issue more treasuries, and there'll be some people out there who will be gladly buying these treasuries from us. That cannot continue. And you know it cannot continue whether you are an individual, a household, or whether you are a country, because something is going to break. And what happens if people weren't going to buy the American debt? It is worrying, Brian, but what can we do about it? So let's hope they can actually resolve this problem, and then we can have a look at what's going to happen later on, and whether or not America will live according to what it is going to be earning in terms of tax revenues.
Now, from an economy, the US, which is probably going through a little bit of turbulence in terms of perception, and there are geopolitical issues around that, to a country that seems to be very much on the recovery, Japan. So Japan is basically back in investors' radar. The stock market is on a 30-year high. And, I can remember the days where Japan was going to rule the world, and they were buying up properties and companies around the world. Very much what China was doing until very, very recently. But David, what's the fuel to the fire around this optimism around Japan now?
Okay, but let's just go back a little and talk about this this debt situation. Debt to GDP in America is now over 100%. Debt to GDP in Japan is probably well over 200% at the moment.
Correct.
So in terms of debt, as a proportion of economic output for a country, Japan is in a worse situation than America. But Japanese debt, Japan government bonds, people are quite happy to buy them, particularly Japan itself, and also
because it's all generally, David, it is domestically held debt, isn't it? The housewives go to the post office and go and buy Japanese bonds. Japanese institutions hold Japanese bonds. So it's all internal.
But it doesn't make it right, does it, to actually sort of have that amount of debt? But at the same time, you look at what is going on in Japan, and the stock market is roaring ahead right now. Currently, it is at a 30-year high. So we have to go back to the 1990s before we see the Nikkei at these kind of levels. And people are scratching their heads slightly. Some people are scratching their heads and saying, why is the Japanese stock market doing so well? And I think the answer is because when you have a look at the large economies around the world, and you have a look at the trouble that America is in, we've already covered that. You look at the trouble that China is in, you look at the trouble that the Eurozone is in. The reason why people are flocking to Japan at the moment is because it's not the US, it's not Europe, and it's definitely not China. So it is probably the least worst situation or the least worst investments that people can make. That is what some people say. But the other thing, of course, Brian, is that we have to go back to Mr. Kuroda and his yield curve control and his ability to actually drive down interest rates in Japan to below zero. It's the only country at the moment that has negative interest rates still. And we also have to have a look at Shinzo Abe and have a look at how he tried to reform Japan. Between these two people, Kuroda and Shinzo Abe, they've actually managed to transform Japan from a sleeping giant to probably not quite a giant at the moment, but definitely a country that we need to reckon with. And it's those reforms and the ability to drive some inflation back into the Japanese economy. I mean, prior to this, I mean, Japan had zero inflation.
Yeah, deflation essentially for decades.
Precisely. And the problem with negative inflation or deflation is that it doesn't encourage people to go out and buy. If you wanted to say, change your television set, change your washing machine, change anything in your house, you would say, what is the point in going out and buying it today? It's going to be cheaper tomorrow. It's going to be cheaper next year. So there is no incentive for people to go out and spend. But the moment you start getting some inflation in the system, then people will say, well, maybe that TV set, maybe that washing machine is going to cost 2%, 3% more next year. So I might as well buy it now. I might as well change it now. And that is the mentality that was missing from Japanese consumers for a long time. They didn't go out and spend, but now there is an incentive for them to spend. So it's the inflation part. So maybe, we were too quick, or some people were too quick to criticize Kuroda for this yield curve control and driving inflation back into the system. And maybe this is what is in the back of Mr. Ueda's mind at the moment, the new Bank of Japan's governor. He's not going to actually sort of try and upset the apple cart now. He is probably going to say, well, things are going so well at the moment. Let's just keep this inflation story going within Japan. And there's no need really to actually reverse the policies that's been put in place by BOJ. Then, of course, we also have Warren Buffett, that's actually sort of a little bit more fuel to the fire by going in and buying these trading houses in Japan and saying, hey, there is actually value there. And when you have a look at Japan, when you have a look at the Japanese market, it's only trading on a PE of about, 13, 14 at the moment. And you compare this with 30 years ago when Japanese shares were trading on a multiple of 40 times. So if people say, is there still room for the Japanese market to move high? I would say it probably is. When you look at the price to book, at the moment, Japanese shares are rated at about 20% above their book value. Back in 1990, they were trading at 4 times their book value. So there is a lot of runway left, I think, for the Japanese market, and people should take note. And just for the interest of compliance, I do own one Japanese share at the moment, and it is Fast Retailing, the owners of Uniqlo. And of course, Uniqlo recently raised the salaries of all its workers in Japan. And this is what is happening in Japan. I think it's finally woken up. The sleeping giant is finally waking up now.
Okay, now sleeping giant is one thing, but demographically, David, is this a blip in the overall decline, long-term decline of Japan? Because one of the things that is happening is a fundamental demographic shift. So you have currently Japan with a population of 125 million people, but that is projected to drop to 86 million by 2016. That's a staggering number. In fact, that's the case study for the globe in terms of an aging society. So is this just a blip in the overall decline of Japan, or do you see then perhaps a new Japan emerging that is very automated and basically will be on an upswing again after a 30-year relative decline?
Okay, I think there are two ways of looking at this, Brian. You raise a really, really interesting point. But I think when you have a look at the demographics of Japan, out of the 120 odd million people, the residents in Japan, let's say half of them are women and half of them are men, right? The women don't actually not many of the women actually go out and work, right?
Yes, they have a reduced labor force participation compared to other developed economies because the women don't work.
But that is changing now. They're encouraging more women to go into the workplace now. So therefore, I think what you will find is that the number of people in work will probably increase rather than decrease. I accept the fact that the demographics in terms of the aging population, that could actually sort of cause a slowdown in the number of people, the growth in the population. But that could be a good thing, Brian, because it just means that the GDP per capita will actually go up because you've actually got fewer people in Japan. But at the same time, if more people are working, then the GDP per capita will actually increase. That's number one. And number two, Japan will have to rethink its policies with regards to bringing in labor from the outside. For a long time, Japan, we could say, was fairly insular. It didn't really welcome people from the outside. But I think that will also have to change, because if its labor force is actually shrinking and they need more people to be in work, then they need to be more welcoming for people to come in from the outside. There is a term in Japan called gaijin. And gaijin just means people from the outside, right? I mean, if you think about it, it's quite a derogatory term. Yeah. I mean, Japanese people might say, oh, you're gaijin, you're from the outside. But it's not a very welcoming term, is it? So maybe they need to actually sort of change that slightly and to become more welcoming of people from the outside and make them more inclusive in Japanese society. And that will actually be a good thing. So I think that will also change over time. It has to change, because if your own labor force is shrinking, then you need to actually bring in labor from the outside. So maybe you and I have a good chance, Brian, of actually sort of getting a visa to go to Japan to work.
On that note, David, thank you very much for the insights on this very special show focused on Japan. I'm Brian Fernandez, and we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.